Coming up today, stocks start the week lower. Investors get bullish again. A look at earnings this week. China trade deadline extended. Ethereum surges past 4,000. And big changes are finally coming for the cannabis industry. It's another action-packed week, guys. Let's go. And welcome back, everybody, to the Daily Market Review. I trust you had a relaxing weekend. Off to a bit of a mixed start on Wall Street. Checkered breadth across the board as the indices all pulled back a little bit on really low volatility here, though. S&P 500 index just below 6,400, calling up on really low volatility as we head into CPI inflation tomorrow, in which there's fears we could see a bit of a bump up because of tariffs. But we'll get into that and a lot more later on. First, let's just cover one of the biggest stories hitting the wires today. Something I've been speculating the last couple of weeks. Could be on the verge of happening. Looks like it is about to happen. Trump says his admin's looking at reclassifying marijuana. Cannabis currently in the same category as heroin. Trump said a decision will be made in the coming weeks. I think it's already been made. He's just working on the messaging and finalizing the details before going ahead with this. And this is something we were hoping would get done with the previous administration. As they promised to legalize it, unfortunately weren't able to get it done. And as I've said all along, I believe Trump will finally be the president that does. As even though plenty of his political supporters don't agree with it, they still come from that old school mentality because they don't understand it. But Trump himself has only had positive things to say about it over the last year. And we heard that late last year when he said it's time to end the needless arrests and incarcerations of adults for small amounts of marijuana, as it's pretty much already legal across more than half the country. It's already a flourishing industry that employs 400,000 people, and there's businesses already making money off it whilst there's people still incarcerated for growing the plant in their backyard. And because it's not legal at the federal level, banks are not willing to deal with these businesses and customers, making it very difficult for them, in addition to still supporting the illegal market, which benefits the Mexican cartels, amongst others. And the current laws are in stark contrast to what 88% of Americans have said for a few years now. They believe marijuana should be legal for medical or recreational use. And that's because the science is clear. Cannabis is far more safe and less risky than alcohol, tobacco, and opiates. Kills people every day. Cannabis has never killed anyone. An overdose on cannabis is called a good night's sleep. And so the industry's been absolutely trashed in financial markets the last couple of years. Really hard to do business. Can't claim expenses as deductions. Not being able to deal with banks. Competing with the illegal market. So on and so forth. And so cannabis stocks have been sold off super hard. But as I've been noting on the charts the last couple of weeks, there's been signs of bottoming and accumulation, and they've really ripped up hard there today. And here's a look at the largest cannabis companies by market cap. Still very small. The biggest Curaleaf at only 2.1 billion. And with most of them still listed over the counter because the big NYSE and NASDAQ exchanges can't accept them because it's still illegal at the federal level. But check out these charts and the volumes coming in. Curaleaf, Trulieve, another national cannabis retailer with shops all across the country. Same with Green Thumb Industries and a few other interesting ways to play it. And these stocks may actually be undervalued. Cannabis REITs. They're landlords to a lot of these cannabis producers, distributors, and retailers. Innovative industrial properties. Currently showing a dividend yield of 16.5%, and a stock I previously invested in a couple of years ago and did quite well out of. New Lake Capital Partners, also trading over the counter. They're another cannabis REIT on very good valuation. Definitely worth a look here. Dividend yield 12.5%. I think they've got a huge amount of tailwind now. And for all of those that follow me on X, I posted a few weeks back on July 26 that the cannabis ETF MSOS is showing strong signs of accumulation on chatter of pending federal legalization movement. I could hear it happening myself and see it on the chart. That's why I posted it just as it was breaking out above $3 a unit. And this has been one of the most actively traded instruments out there today. 56 million units trading now at 470, up 25% today. And there's a look at other cannabis ETFs on the market. And you can see even the largest, MSOS, is still relatively small. At only $500 million assets under management, that is a very small ETF. And in fact, the entire industry is so small. And that's because large fund managers, big institutions have to stick to federal law. They can't yet invest in this. But once it's been rescheduled and legalized, it opens the floodgates for big Wall Street institutional money to come into this space. And that'll really lift valuation. And there's a look at a long-term chart of MSOS. You can see how much it's been beaten down. And this is a log chart from around 50 a unit down to $2 just a couple of months ago. But I'm confident my reversal signals indicator has nailed the low, and I'll be surprised if we see that again, because even though it still may take another year or two before it's federally legalized. Financial markets are forward looking, and I think just like Ethereum, they're going to be pricing in good times ahead. And so if you're interested in following someone who actually trades and shares ideas that I'm actually invested in myself, then make sure you subscribe to this channel, because unlike other FinTubers, I regularly share investments and trades that I'm in myself, and this one's done exceptionally well for my options members today. And there's plenty more other interesting opportunities out there. But before I get to them, just looking at the market and some current themes going on. Investors overwhelmingly believe US stocks are overpriced. Bank of America's latest global fund manager poll found that a net 37% of investors were overweight emerging market stocks, the highest in 2.5 years. And even though investors have become more bullish finally with this V-shaped recovery, the vast majority of them, 91%, still think US stocks are overvalued. And a chart I always find interesting, and even with this V-shaped recovery, is that when you strip out Nvidia of the S&P 500, European and Japanese stocks have been outperforming American stocks this entire bull market since we bottomed in October 2022. Even though US companies as a whole are still growing far quicker than European and Japanese companies, not to mention are far more friendly towards investors overall and deliver far higher returns on equity, whilst also still being able to invest more into research and development, innovation. And in addition to innovating, they're also buying back their own shares with all that cash at record pace, expected to top 1.1 trillion in buybacks this year. Very hard for the market to go down a lot when companies are propping it up by buying so many shares, decreasing supply. At the same time, year-over-year earnings growth still coming in at double digits, with technology absolutely powering ahead, 21%. Again, hard for the market to go down a lot when this tech-driven boom is just growing leaps and bounds. And we're just getting to the back end of Q2 earnings season, starting to slow down a bit here. We've heard from most of the biggest companies. There's a look at some results we got today and some stocks expected to report this week. A lot of retail favorites. We just got results from Oklo, the nuclear reactor company, coming in with a sizable miss, but the market doesn't appear to be punishing them too hard after hours. Big Bear, AI, different story. They had a monster miss and getting sold off very hard after hours, down 28%, showing these smaller hot stocks are still very volatile. Tomorrow we'll be looking at CoreWeave, Rigetti, and a few others this week, Cisco and Applied Materials, but we don't really have any big popular stocks that are likely to move the market too much. And what has been interesting these last few months is that stocks at risk of disruption from AI have significantly underperformed the market. Looking at Bank of America's AI risk basket here in the black line, you can see that monster divergence with the S&P 500, breaking away from a pretty strong correlation it's had over the last couple of years, meaning the market is pricing in AI disruption in a big way. And this is in addition to the interesting headline we got today, with Trump adding a new dimension to US trade policy, pay to play. Initially banned Nvidia from selling their chips to China, did a quick pivot after apparently Jensen Huang, CEO of Nvidia, convinced him to sell the watered-down H20 chips to China. Now apparently there's a new agreement. The US government will take a 15% cut of the revenue generated by both Nvidia and AMD from the sale of certain high-end chips used in AI to China. No doubt a controversial measure, which kind of treats Nvidia GPUs like a natural resource. Be interesting to see what China thinks of this. The US government profiting from GPU sales. Very well could be some legal recourse. But at the same time, extending the deadline with China, which is no real surprise either. As the original deadline expired tomorrow, it's been pushed out another 90 days to the 9th of November. Highly likely to get a deal done. The market's not too worried about this at all. It's obviously going to be a monster trade deal. A few details to work out. And this was after a quick U-turn as relations got quite nasty, but quickly reversed course in Geneva back in May. The Chinese came out and played hard, but soon realized the stark reality: they need the states more than the states need them. The biggest headline this week will be CPI inflation due out tomorrow. Consumer prices, how much have they gone up? Economists think they likely rose 2.8% in the 12 months through July, slight increase from 2.7 in June. And this comes after last week when the BLS gave us a weak jobs report and Trump fired the agency's head soon after. And so it could be interesting tomorrow. We very well may get a bump up increase. The market may sell off, then the dip may get bought again because a lot of people on Wall Street are just not buying this data from the BLS. Because like Truflation says, the company that tracks thousands of prices in real time in the economy, they think inflation's running on a one handle, and they even say themselves, the BLS, continue to feed us delayed and inaccurate data, and they've been continually calling for the Fed to act and cut rates, saying they're far behind, just like the bond market is suggesting as well. And because the reality is, unlike what the experts, economists, and mainstream media were screaming at us a few months ago, that tariffs are going to cause a nasty global trade war, inflation's going to go back to above 5%. Just as Goldman Sachs has found, consumers have been spared most of the tariff costs so far, and they're kind of being absorbed all throughout the supply chain. And also, the reality is the big increases we saw in inflation a few years ago were to do with crude oil spiking, along with food and shelter, basic necessities, utilities. They are exempt from tariffs, and anything that's really going to bump up or has the potential to bump up inflation is going to get spared. We've seen that with the admin being really selective on exempting certain products from tariff because I don't want to see a bump up in inflation, obviously. And so inflation's structurally come down the last couple of years. For it to turn back up significantly would be a surprise. We very well could see a little ebb and flow bumping up. But you got to keep in mind back here, the Fed printed $5 trillion worth of new currency. The federal government took spending to a whole new record. That's what caused the inflation. And so the chances that tariffs on imported goods, many of which are discretionary in nature, is highly unlikely to give us big structural inflation again. And that's why the 2-year government bond yield, which most of the time leads the Fed, is still significantly below where the Fed is at, with the highest interest rates in the developed world. Even though the States has some of the lowest inflation in the developed world, there is a huge divergence and gap going on with US rates. Moving on to what else is rallying out there today, Tesla breaking out of a key technical level as momentum and excitement continues to build for their new robo-taxi service, which has just been launched in Texas. We also got news of longer wait times for Tesla vehicles, and a signal of more order activity. Also may have something to do with it being the last quarter buyers can qualify for the federal purchase tax credit worth up to $7,500, as that was just recently eliminated. But also the market's coming around to Tesla being a leading AI company, potentially gonna be one of the biggest data collection companies in the world, and leading with full self-driving, FSD. They'll likely license out to the rest of the industry. In addition to robo-taxis, the stock breaking out of this bullish pennant formation today after being significantly lagging behind the rest of mega cap tech this entire year. What also did really well over the weekend, Ethereum actually getting above 4,300 a coin today, helping to lead the crypto market as a whole higher as it quickly catches back up to Bitcoin. And now Tom Lee's Ethereum treasury company, for which he's chairman of, Bitmine Emergent Tech, is now the largest holder of Ethereum. It got over 1 million coins, overtaking Sharplink Gaming, and there's a new player on the market, the Ether Machine, ticker symbol DYNX, also shot up there today on pretty good volume. And don't forget about Coinbase. They're going to be a big player, and Ethereum got big reserves, and they're entitled to 50% of all the revenue Circle Internet Group generate from operating the USD coin. And just looking at the largest Ethereum ETF on the market, the iShares Ethereum Trust from BlackRock, 11.5 billion assets under management, still getting big volumes. It broke out today as well, and we're getting more and more signs of mystery buyers. Some institution bought over 1.1 billion worth of Ethereum over the last week. And these are new wallets, big money starting to get into here. And that's because a lot of fund managers are still structurally underallocated to crypto as a whole. Latest Bank of America Global Fund Manager survey showed 3/4 of them have 0% allocation to crypto. Big contrast to 41% of them having the same position in gold. And in fact, 8% or more of fund managers have a healthy 7% allocation to gold, but there's practically none at that same level when it comes to crypto. And the pipeline for crypto-related companies continues to heat up. Looks like crypto exchange Bullish is set to hit the market tomorrow, backed by Peter Thiel. Targeted valuation around $5 billion. Initial raise is going to be done around $30 a share. Wouldn't be surprised to see that hit 50. No doubt it's going to be a popular one on traders' screens this week. We also got Miami International, MIAX, derivative exchange hitting the market this week, and the momentum just continues to build in that space, as it does for calls for members of Congress and their spouses and children from trading individual stocks. They should better buy ETFs, but politicians buying stocks is kind of like sports referees and umpires betting on sports teams that they're actually umpiring. Doesn't make sense, right? And so there is a few politicians calling for this, introducing new bills. It's been something that's been going on for a few years, but there's plenty of politicians that push back on it. The biggest of which, Nancy Pelosi, lifelong politician, along with her interesting husband, have accumulated massive wealth over their lifetimes, in excess of 300 million, by regularly beating Wall Street and just so happening to invest in companies that are located very close to where they actually live. At the same time, pushing for laws that have allowed parts of their hometown San Francisco to resemble that of a third world country. I've seen it myself. So hopefully for the health and integrity of the US stock market, this can get done soon as well, as politicians shouldn't be allowed to trade individual stocks, just index funds, for which they can't have inside information. Moving on, a few other interesting things. Here's a look at the Harvard stock portfolio. Biggest position in Microsoft, and what you'll notice, many of their other positions are global digital platforms. Amazon, Booking.com, Meta, Alphabet, Google, and recently a new bet on Bitcoin, long-held position in gold, and interesting, a sizable position in Light & Wonder, which is a little known small cap involved in the development of online gaming in CNET, which I thought was interesting. And here's another one for you: the change in average residential electricity prices just over the last year using data to May. And so this big secular trend in data centers powering AI is really only just begun over the last year or two, but we're already seeing some states have increases of 20% or more in the cost of electricity just in the last year. Like I said, it's going to go up a lot. And that's why we've seen a lot of these electricity related companies perform well on the market. And I don't think that's going to change anytime soon either. And here's another one: the world's fastest growing jobs. If I was a teenager looking to get into the workplace in the next couple of years, as a skilled professional, these are some of the areas I'll be looking at. Probably robotics is what I'd be looking at. But of course, anything to do with data, fintech, AI, machine learning, always going to be jobs for software, anything to do with automation, Internet of Things, and of course, renewable energy, clean energy, nuclear is likely to be a good place to be for many more years, as well as investing in these types of companies as well. I've got the Robo ETF in my long-term portfolio and have been invested in uranium for several years now, something I've been talking about ever since I started this channel. But there's also other interesting sectors out there as well, like space exploration. Invested in Planet Labs as part of my stock pick service. And they basically map out the Earth more than any other company and then sell that data to many different industries who need it. I'm also invested in Grail, which use AI to help with the early detection of cancer. And I believe AI is likely to make a large discovery in the field of healthcare some point in the next year or two. Drones and air mobility, another hot sector. I continue to stay invested in Blade Air Mobility, and of course fintech has been hot for a few years. I'm still holding Tiger Brokers, Southeast Asian online broker with an advanced trading platform, and of course rare earth stocks, probably the hottest sector this last few weeks. And my position in Idaho Strategic Resources doing very well. But what really stood out to me today was of course cannabis. The long awaited news that we're getting movement. Of course it's not guaranteed at this point of time, but I do think Trump will do the right thing. It's what the vast majority of Americans want. It's backed by science. It makes sense on many different fronts. People are going to use it regardless. You might as well regulate it and tax it. And like Ethereum, I think this could have a lot further to go. No doubt it's a bit heated here in the short term, but any pullbacks should be shallow and bought up, as I expect at some point over the next week, 2 tops, for Trump to officially come out and reschedule it, and then the ball could really start moving quickly on entire federal legalization. And hopefully most politicians in Congress actually vote in favor of their constituents and what the people want instead of what their big pharma corporate sponsors want, because this is a huge threat to the pharma industry and their pain medication business, in addition to many other things cannabis can treat. Otherwise, just getting back to the market, we've still got the Magnificent Seven driving this rally, actually breaking out to all-time highs as a group there today, whilst the NASDAQ Equal Weight 100 index actually looks to be a bit soft here below the 50-day VWAP. We'll see what print we get on CPI inflation tomorrow and how the market digests that. But just looking at the VIX one-day index, 15.93, options market is not expecting too big a movement. It's pretty much right bang on 16, which is a 1% expected movement up or down tomorrow. So we'll see what happens, and I'll break it all down for you again this time tomorrow. Cheers.